General Mills has been selling food products for many years. I've had plenty of Cheerios in my time, as well as their granola bars and other products. The company has expanded. Now they have a pet food division, which is doing quite well. Overall, General Mills is a nice, steady stock. It's a food company, it's a consumer staple company. So, this is a type of company you buy that is just going to be a nice, stable investment. And General Mills pays a nice dividend as well. General Mills announced their earnings today. It's March 20th, and earnings were well received. I'd like to take a look at the fundamentals behind General Mills. I'd also like to do a valuation on General Mills and determine what I think the stock should be priced at. Compare it to the current stock price and make a decision on this stock. I own General Mills. It's a steady stock. I don't own a whole lot of General Mills. It's in my income portfolio. I like the dividend. I like the stability. But I'm going to value the company and make a decision in this video as to whether I should buy more shares, just hold my shares, or sell my shares in General Mills. Looking at the fundamentals for General Mills, the market cap for the company is about 40 billion. Their revenue is about 20 billion. So you're paying 2 times sales. It's a good net income company. And one thing that investors are liking today is that they have really controlled their cost. If you control your cost, you control your margins. And although revenue is not growing, their costs actually went down 3 or 4% overall, which is a really good margin gain. I think that's what investors are really liking. The earnings per share forward PE is 15.75, very good forward PE. The S&P is at around 26. So this is a food company, a stable company, but it has a very good brand. It's a very well-liked stock. It's a very trustworthy stock. Pays a dividend of 3.3%, nice steady dividend. Many analysts cover this stock and they have a hold rating. And the price target for the stock is $72.78, just above the current stock price at $70.75. Looking at the 1 year chart, the stock is down if you compare it to exactly 1 year ago. It's down 12.6%. I'm a value investor and I like volatility. I like when stock prices go up and down, especially on the downside, because it gives an opportunity for an investor like me to buy when the stock price comes down, which I have done, and I've bought along this range here down below. Because if you look at the year to date, the stock is up 8.78%, which is very good. Last month, it's up 6.89. So on a year to date basis, it's doing quite well. It's up 8.78% and it pays a nice dividend. So really good performance out of a steady consumer staple stock. I'm going to value General Mills by looking at all the free cash flows I expect the company is going to produce in the future, discounting them to today's value. And I'm also going to look at earnings per share and value the stock price based on earnings per share. Let me get started with free cash flows. I project that the company in their current fiscal year is going to produce $2.6 billion of free cash flow. And I'm going to grow those cash flows by 6% in years 2, 3, 4. And then in the future for terminal value, I am going to grow terminal value by 3%. The company has a decent balance sheet. I'm going to discount the free cash flows by 8.5%, which is a reasonable amount for a company that has a decent balance sheet and is in a very stable industry. The present value of all those free cash flows is $48 billion. I'm going to add the cash and take away debt to get to an equity value of the company. And compared to the market cap today, it looks like the company is a little overpriced. It's priced at a premium of 9%. If you look at cash flows, or if I look at cash flows, now that's a reasonable price on a good quality company. But let's take a look at earnings per share. Earnings per share is expected to be $4.53. And I'm going to have a PE of 24. And the reason for it is the S&P is at 26. This is a quality company, pays a dividend. So I'll go with a 24. So I value the stock at $88.92 per share. Shares are being sold at $71. So there's actually a discount of 25% if you look at earnings per share value. I'm going to blend the two, putting more weight on the free cash flow method. And I get to a 2% discount on this stock. Now that's a fair price on a quality company. So should I buy more shares in General Mills, hold or sell my shares? Well, let me go through my process. First, the company. I really like General Mills. I think they have a quality business in a stable industry. They pay a dividend. So I like the company. The balance sheet is a fair balance sheet. Their debt is equal to 3 times EBITDA. There's no discount on the stock currently. Therefore, I'm going to just hold my shares of General Mills. As I showed in the stock chart, the stock price could easily be down 10% from this point in the next 3 to 6 months. I'd rather wait until the stock price comes down than buy more shares at that time. General Mills is a good company to own for my income portfolio. It's a good stable stock. The price isn't going to go up too high. It isn't going to go too low. It's just going to stay within a trading range. It's also going to pay me a nice dividend. Good stock for my income portfolio. I really appreciate you watching the video, and I hope you found it interesting.